Cash flow. By the end of this session, you should be able to define the term cash flow forecast and identify the typical inflows and outflows of cash in an organisation. So let's take a look at what cash flow actually is. Cash flow is defined as a flow of money going into and out of a business organisation. Now, it's important at this point to make it clear that cash flow is not showing you your profit. Remember, if you're asked to define profit, that's revenue minus costs. Cash flow just shows the money going into and out of a business at any particular point, where your profit or your loss tends to be at the end of a year. So let's have a think about some typical inflows and outflows of cash in a business. So what do you think are the typical inflows of money in a business? And what do you think of the typical outflows of money in a business? I'm hoping you're thinking typical inflows will be things like sales revenue, so money coming from selling of products or services. You may also have the owner's personal investment, because they may invest some of their own savings, for example, to set the business up. You may have an overdraft, so short-term borrowing for those months when you go into the red, but you know you can pay it back because maybe you're getting paid by a supplier in a month's time and you go back into the black again. You might have a bank loan, for example. That could be a typical form of inflow of cash into a business. Typical outflows might be your rent, or your wages, or your salaries, or it could be like your cost of sales or buying your stock. All these things, or your utilities bills, or your broadband bills, so money going out of the business. Hopefully you've thought of all these things. Now I want to take this a little bit further and start to look at what a cash flow forecast is. Now the key word here is forecast. You've come across this word before, so I'm hoping you're thinking already about that P word, the key word, which is a prediction. So a cash flow forecast is a prediction of the flow of money going in and out of business. So rather than the actual, which is a statement, a cash flow statement, a forecast is a prediction. So it's guessing. You are trying to work out the flow of money that's going to go into and out of your business organisation. So what is cash flow? Let's try and break it down into simple steps. I want you to think about cash flow as being like a bathtub. And imagine the bathtub is your bank account for the business. So the bathtub is the bank account. Now hopefully, what do you think is going to go into your bathtub? And the money is symbolised by the water. So the water swashing around is money in your bathtub. So hopefully the more money in your bank account, the better you're doing, the better your cash flow position is. Now the money only gets into that bathtub by the taps. So the taps are going to symbolise the flow of money into our organisation. I notice you've got a red tap and a blue tap, a hot and a cold tap, and we'll come to that in a bit. And then of course we've got a plug hole. And a plug hole symbolises all the costs that are going out of the business. So these are the expenses. So our money will drain down a plug hole. Now the eagle-eyed amongst you will notice the plug hole has moved to the wrong side of the bathtub, I know. But you know, we all make mistakes, and it makes the symbolisation very simple. But if you want to move the plug hole over in your diagram, feel free to do that. So, inflows. So what do you think is the best inflow of money into a business? Also, what other possible inflows could you have? The cold water tap could symbolise sales revenue, because this is all the money you make from selling your products. And the hot water tap could symbolise maybe a capital injection, so money coming in from the owners, or a bank loan, or an overdraft that you're taking out, so borrowed money. And we'll come to the reason why in a minute. Now what you need to think about is that sales revenue is a sustainable source of revenue. Now what we mean by that is that if you sell more products, you're actually going to make more money. So it can keep doing this all the time, ongoing process, and that means your business is successful. If you're selling more products, you're being more successful. So it's a more sustainable approach. Whereas the capital injection or the loans or the overdraft are unsustainable, because you'll need to keep borrowing money all the time to keep putting it into the business to try and make the business grow. And if you think about this logically, every time you borrow money, you're actually increasing the size of that plug hole, because every time you borrow money, you have to pay interest, and interest is a charge to the business. So you're actually increasing the cost and the money going out to the business. So, outflows is where all the money leaves the business, and all the money leaves the business down the plug hole. And these are called costs, as we typically talk about in business. Now, what would you expect to happen to the level of money in the business if it has too many costs draining out of the bank account? I'm hoping you're going to tell me it falls, and look what I've done with my little drawing here. I've lowered my level of water. Now, when the level of cash starts to drop and it gets too low, this is when we start to talk about the business having a liquidity problem, and there's another key word, liquidity. So we're talking about businesses now running out of money. Now, we're not talking about businesses failing because they're not profitable, but we're talking about them failing because they're running out of money in the short term. Because that cold water tap may be being turned on maybe in 3 months' time when, say, a supplier that you owe money to, you've got to pay them now, you've got to pay them tomorrow. So you've got to take all that money out of your bathtub and pay them tomorrow. But one of your customers is going to pay you in 3 months' time. So you might be able to make a profit in 3 months' time, but the money's going to dry out now. And if you haven't got any money in a bank account now, you can't pay wages next month. So you might need to turn that hot water tap on. But if you borrow that money, then you're making this tap size, the plug hole size, bigger. And that can have a negative effect on your cash flow in the long term. So what can a business do to try and stop a cash flow problem happening? There are only two solutions. You either increase your sales revenue by turning on the tap faster, or you reduce the cost of the business, making the plug hole smaller. And that's a fairly simple solution. You never solve a cash flow problem by turning on the hot water tap. Because if you borrow money, and you're trying to solve your problem by borrowing money, and you're not going to address the real issue of not selling enough products, all you're doing is making your plug hole bigger and draining out hot water, just wasting all that hot water. Imagine getting into a bathtub, stretching over, putting your foot into the water, and getting burnt. We've all been there. You've all screamed in pain like I have when you've managed to burn your foot, and you have to put your foot in the sink and turn the cold water tap on to try and cool your foot back down, or blow on your foot to try and cool it down. That's what a business is doing when it's borrowing money. It's just pouring that money down the drain and getting burnt. So, as you can see, we've got our sustainable sources of revenue, which is our sales revenue, and we've got our unsustainable sources of revenue, which is our capital injections, so money from the owner, or bank loans or overdraft. And that is why it's really important to get our cash flow position and our cash flow management correct in the first place. Okay, now it's over to you. I think you should try and draw your own diagram that can try and symbolise the concept of cash flow. Label up your diagram and then explain how to solve a cash flow problem. This will hopefully see if you understand the concepts we just covered in cash flow. And then we're going to move on to the next task. We're going to add some numbers. Okay, now we're feeling brave. We're going to add some numbers. As you can see, I've got a blank cash flow forecast. I've got my total inflows, my total outflows, my net cash flow, my opening balance, my closing balance, and I've got my months going across. I've got 4 months, January, February, March and April. And notice that I've got inflows of £3,000 and outflows of £2,000. Now we need to start completing this, so let's have a look at these numbers. Net cash flow, if you want to think about it, is the profitability figure. It's working out how much profit or loss we've made each month, the net cash flow. So what we need to do is work out our inflows minus our outflows. Now in this case here, we've got £3,000 coming in the business in January, and our outflow is £2,000. That means we should have £1,000 profit at the end of the month, as you can see there. Now, because we're a brand new business, we're going to have an opening balance. Our bank account is brand spanking new. There's nothing in it, as you'd expect. There's going to be nothing in our bank account, so we're going to have a big fat zero in our opening balance. Now, our closing balance is calculated really simply by adding our net cash flow to our opening balance. So our opening balance is 0, and we made £1,000 in January. So by the end of January, our closing balance will be £1,000. Now notice I moved that £1,000 over to the opening balance in February. That's because when we finish, our bank account finishes on the 31st of January, on the 1st of February, it's got to have the same amount of money in there, £1,000. And that pattern keeps passing on. So the closing balance always becomes the opening balance. Some more numbers in. So this time in February we've got £4,000 inflows and £2,500 going out. Hopefully you've worked out that the answer should be £1,500 of net cash. Now if we're going to do our closing balance, it's going to be our opening balance plus our net cash flow, which gives us £2,500. And notice again that moves over to the opening balance of March. So the closing balance of February becomes the opening balance of March. Let's add some more numbers in. So in March we've got an inflow of £5,000 and an outflow of £3,000. So our net cash flow is £2,000. So we've got our opening balance of £2,500 plus our net cash flow of £2,000. So our closing balance is £4,500. And of course our £4,500 moves to April because that's the opening balance. And then of course numbers here, £5,000, our inflows. And if you notice this time we've got outflows of £7,000. We spent more money this month. So our net cash flow is going to be minus £2,000. And notice I put that in brackets. Brackets is when you have a negative number. Now, of course, we've got an opening balance of £4,500, and we made a loss in this month of £2,000. So how much will be in our bank account this time? £2,500. And as you can see, that is a complete cash flow forecast. We have forecast our data for the so-called months on here, January, February, March and April for our organisation, and worked out how much we're going to spend and where we think we're going to be in our position. Notice it gets quite strong and positive, and then all of a sudden it starts to drop back down. After April, it could be a potential problem. We need to think about that, what we're going to do, and what solutions we could use to solve our cash flow problem. Okay, what I think you should do now is have a go at completing the cash flow diagram, which is on the screen. You will probably want to just draw it out and use a calculator or use your mobile phone to work it out for me, and then see if you get the answers correct. Thank you for joining me with this presentation. You should now have a better understanding of the topic area we just looked at. Don't forget to follow me on Twitter, it's @BeeBusinessBee, and click the subscribe button to subscribe to my YouTube channel. Also, don't forget to visit my website, BeeBusinessBee.co.uk, and add it to your favourites. Lots of free business resources and quizzes to help you with your business studies. Simply go to my website, create your free BeeBusinessBee account, and then you can access all my quizzes, take some of the little tests, get your score sent straight to your inbox with a lovely BeeBusinessBee certificate. And don't forget to view some of my other videos and share them with your friends.